call the roll. We have a long agenda.
Okay, sir. Roberta Abdul Salam.
Present.
Robert Ash. Jim Doris.
Good.
Roderick Edmond.
I'm excited to get us all together.
Phil Floyd.
Present.
Give our friends just a
Roderick Farson. Ryan Glover. Jerry Griffin. Frida Hardage.
Present.
Alicia Ivy. Russell McMurray. Al Pond.
Present.
Rita Scott.
Present.
Christopher Tomlinson. Thomas Worthy. Chairman, we have 5 board members participating.
All right, thank you. I know Jim Durrett had indicated he would jump on. Also, Representative Silcox, Deborah Silcox, had indicated she would join. She's not on yet, but for those of you on the call, Deborah is chair of the state legislative MARTA committee and was hoping to listen to the report from KPMG. So first, I'd like to go ahead and ask for a motion for the approval of the minutes in a second.
Move approval, Bill Floyd.
I apologize.
Frida Hardage, seconds.
All right, we have a motion by Mr. Floyd and a second by Ms. Hardage. I'd like to ask, are there any additions or amendments or corrections to the minutes? If not, we'll ask, are there any no's? Are there any abstentions? Let the record reflect that the minutes were approved by the entire group. The next order is a report from our external auditor for the financial audit by Crow. And we have both Brad Shelley and Scott Nicholson here. So Brad or Scott, I'm not sure which of you will be taking the lead, but I'll turn that over to you.
Well, great. Thank you. This is Scott Nickerson from Crow, and we really appreciate the opportunity to present to the audit committee today, as well as Representative Silcox, Mr. Pond, Mrs. Hardage, and Mr. Parker. Our goal here today is to give you an overview of the audit results for the June 30, 2020 audit. With that, we have a brief presentation and an overview of communications that are required by the AICPA standards related to your audit this year. We're going to use the PowerPoint slides to walk you through a summary of the audit process and key points for your consideration today. Brad Shelley, who's a partner in our transportation practice, is going to walk you through the PowerPoint. Go ahead, Brad.
Thanks, Scott, and good morning to everyone. If you want to go ahead, there we go. So this slide, really, we just wanted to spend a moment and kind of reflect back on, the methodology that we use and that goes into the audit process. Obviously, you have the audit performed for a variety of reasons, as we listed out there. Many of those compliance in nature and oftentimes required. And so we go through a process of looking through financial statement information, but also discussing with the audit committee any concerns or internal controls or any impact that they may have, insights they may have. We look at audit risk and really try to design our procedures around the various risks of the organization and really try to tailor those based on your individual risks and needs. We look at the internal controls, including tone at the top and any kind of concerns there might be there. So when we're looking at the internal control structure, it's not just the account level internal controls, it's entity-wide internal controls as well. And so that's key to understand. We also look at the monthly financial reporting or the period end financial reporting and get an understanding of that, how that process is working, and again, what type of internal controls you have in place there. it relates to the financial statements, there's a few different sections within there, and a few different items. So obviously within your financial statements, there's some audit highlights that included. Typically those are included in the front with the management discussion and analysis, which really gives you a little bit more in-depth comparison year over year and some thoughts behind some of the changes and fluctuations and balances year over year. And then finally, the comprehensive annual financial report, or the CAFR, will be produced. So what you're looking at today, I believe you have copies of, is the basic financial statements draft. The CAFR will include a little bit more information, an introductory section and a statistical section, both of which are required, but are not part of the audit process. So we do compare that information and look at it and make sure it's reasonable and aligns with the audited information. But the information, oftentimes it's in the statistical, is not information that is necessarily financial in nature or part of the audit process. One item I wanted to mention before we really jump into specifically this year, there was one new accounting standard that was implemented this year, and for the most part, most of the new GASBs that were originally required to be implemented got pushed back due to GASB 95. So when COVID happened and there was a shutdown, GASB came out and introduced GASB 95, which delayed the implementation of most, if not all, of the GASBs that were upcoming, typically by 1 year. And we'll look at that in a little bit more later. There was one GASB implementation guide, 2019-1, which, when discussing with management, they decided that to go ahead and implement that this year because it did have a financial statement impact. As you can see, at $82.5 million timing impact. And so what I mean by the timing is this is simply when revenue is recognized for federal grants, state grants, any type of grant situation where you have an agreement. And what was historically happening, and we saw this with a lot of different transit agencies actually, and specifically in preventative maintenance grants in most cases, where you're getting those grants year over year, oftentimes you don't get the actual signed agreement until after the fiscal year is ended. So it's a little bit of an odd situation where, for example, for FY20, you may not get that grant agreement actually fully executed until the first part of FY21. And so what had historically been done, and MARTA had been doing it this way for a number of years, and several other transit agencies that we audit were doing the same thing. They were recording that revenue and recognizing that revenue in the year when those expenses were taking place, because you had the grant agreement almost executed, but it wasn't fully executed. And so there was some details that went into that, and it made some sense logically. But GASB clarified this year with this implementation guide that you actually have to have the executed grant agreement in order to recognize the revenue. So what that did was that shifted that $82.5 million that was recognized as revenue last year, that was backed out of beginning net position and was recognized as revenue this year in fiscal year 20. So again, doesn't have any impact on, revenue overall, just has an impact on when you actually recognize that revenue. And by going ahead and adopting that this year, you're able to move forward and have everything in the correct years as we go through. I'm going to move ahead. So this, just wanted to give you a little bit of background again on the approach and the plan. I know we discussed earlier, I think back in April, our audit plan. And so things, generally speaking, went as planned. This year was a little bit different in that we performed the audit work remotely for the most part. There was a few procedures that we needed to be on site for, but I would say about 95% of the work was done remotely due to COVID. We performed interim back in May. We did our year-end field work in mid-August all the way through the end of September. We're able to complete the procedures there and then moved into the review of the reports and preparation of the reports in September and now ready to finalize. Go ahead to the next slide, please. So this was just a reminder again that things were a little bit different this year in how we worked together. But I think what we found was it actually worked out very well. And in some cases maybe it was more smooth, more efficient than it had been in previous years. And so I think that one just goes to show that the flexibility of your team in the accounting and finance area to be able to produce that information electronically, to be able to have that ready for us and for us to be able to continue and go through our audit procedures. Because the one thing that didn't change is we didn't get any break on the amount of audit testing we had to do, right? So they didn't change the compliance requirements. We still had to perform a full audit just like we would any other year. We just had to do that differently. And so really did appreciate the entire team on MARTA's side for working together with us to be able to accomplish that. Next slide, please. So as far as audit deliverables and what we're actually providing to you all, we provide the independent auditor's report, the management letter, and the SAS 114 letter, which I believe you have drafts of each of those. Those would be finalized after today's meeting. If you have any changes, we're happy to look at those changes and make those. If not, we'll proceed with finalizing. We also provide the independent auditor's report on internal controls over financial reporting and compliance in accordance with government auditing standards, which is part of your single audit reporting package. And also the independent auditor's report on compliance over each major federal program, which that is specific to the federal programs that we tested, the federal grant programs that we tested this year. And then an in relation opinion to the schedule of expenditures of federal awards. The last couple of bullet points here are sometimes things that get passed by, I think, because they're a little bit smaller, but we also provide an agreed upon procedures report related to the National Transit Database forms that are required to be submitted by MARTA. So you provide the forms and submit those forms, and we do some agreed upon procedures over those to ensure the data is correct. And then we also certify the data collection form, which again is your federal grants, and that's required to be submitted to the Federal Clearinghouse. Next slide. So with that, a couple of slides of some financial highlights at a high level. Looking at your statement of net position here, your total assets and deferred outflows at the June 30, 2020 were about $4.5 billion. Compared to about $4.2 billion in the previous year, so a slight uptick there. Same thing on the liabilities and deferred inflows side of things. You see a slight uptick of from $3.4 billion this year compared to $3.1 billion in the prior year, and really no change year over year in the net position. So that's a positive, and I think this has been one of the things everyone was curious about how the financial statements would look based on COVID results, and this gives you kind of a high-level picture. If you move ahead to the next slide, this probably gives you a little bit better picture of the actual year activity. And obviously for 9 months approximately, or 8.5 months, you had a normal, what I call a normal year, and then things changed. And so what you'll see here is the operating revenues. That's primarily your fair revenue. So that's where you see your decrease, 141 million last year down to 110 million this year. So obviously an impact there. Expenses weren't impacted too much based on some of the changes that were made and some of the things that happened with operations this year. You saw a pretty consistent level of expenditures. Where you did see the positive impact is through the CARES Act funding is in the non-operating revenues, as you see that increased from 569 million to 684 million. 82.7 million of that is CARES funding that was recognized this year. And you still have CARES funding that is being spent and recognized as revenue in FY21 as well, and potentially into FY22, depending on the strategy there and how much is used. But obviously a good positive inflow there to help offset some of the decreases that you see in the operating revenues, and then also in some of the other areas that kind of get masked by that. Capital grants this year was down a bit. That had more to do, I think, with the capital activities that were going on to some extent. And then your overall change in net position actually has an increase this year from 69 million last year to 101 million this year.
Hey, Brad.
Yeah.
I just wanted to chime in. I think we always have an advantage of reporting on what's happened already. I think the key point is recognizing that the CARES Act money, what uses it has in fiscal year 21 is really important. Most, if not all, the transit agencies we work with across the country, from very large like MARTA to very small, are fairly dependent on that CARES Act funding to provide short-term relief with an assumption that some normalcy returns. So I think it's critical from a financial management standpoint that we will have a forward-looking approach to see how budgets are laid out, see what services are being provided. Fortunate to have the funding in the current year to offset the fare decreases in a short period of time. But I think if you look, as you probably look at budgets and projections, I think that's a more critical point for the committee and the board going forward.
Right. Good point. Next slide, please. So as part of our audit procedures and communications, we're also required to communicate some other items. And so we went through some of this previously in the planning meeting, but our responsibility is to provide an opinion on the audited financial statements. And so we are providing an unmodified opinion in the financials. So that is a clean opinion. And so the highest level of assurance we can provide. So positive there. As far as significant accounting policies, we did discuss the one new GASB that was implemented this year. No other real significant changes there. No changes in any kind of management judgments or accounting estimates or our judgments for that matter. There were a couple of corrected and uncorrected misstatements this year. So the one corrected misstatement was related to a capital lease transaction, which if you look at the single audit report, there's some information in there about that. Essentially, in FY18, MARTA entered into a lease purchase agreement with Pinnacle Public Finance. It was about $36 million. And so at that time, $36 million was placed into an escrow account in MARTA's name to be utilized for capital improvements, I think primarily lighting and other type of electrical improvements to increase the efficiency of the electricity and the energy costs. When that $36 million was placed into the escrow account, that is when MARTA became obligated for those future capital lease payments. And so really what should have happened was there should have been a cash transaction for $36 million to put that escrow account on the MARTA books, and also to record a liability for that. And so no net impact from that, but nonetheless, that transaction should have been reported at that time. Fast forward to this year, and as management, as the finance team was going through and began having to make payments on those capital lease obligation, that's when this was discovered by the accounting department, that the cash had not been recorded and the obligation had not been recorded. And so that really leads into our recommendation, that's the next bullet point down, just that we recommend that all significant financial transactions be communicated and all supporting documentation be provided to the Director of Accounting. Also recommending that all bank or investment statements initially received by employees of MARTA be routed directly to the Director of Accounting to determine proper ownership and how to record those transactions. So I think it was a matter of not all of the right people being involved and being in the loop on the transactions that were taking place, and really boils down to communication, right? So wasn't communicated to the accounting team, and so they weren't aware of this. The escrow account statement was going to another individual who was tracking it, but it wasn't somebody that was in accounting, and so that never got recorded until the current year. Again, no real net impact, and after this adjustment was made, everything has been properly recorded as of June 30, 2020. But it was more of an issue in the previous years of not being recorded.
Right, and Brad, the transaction was approved. It went through a normal approval process. The issue is that there are no cash transactions that occurred until the current period, and that's where the accounting department identified the issue.
Yeah, and so just to clarify also on the cash, as I mentioned, there was $36 million of cash into an escrow account. So there was cash involved, but this was not a situation where, $36 million of cash was coming out of your, operating account or something like that. With this being a new account being set up and really it being placed into an escrow account that wasn't really managed by MARTA either. I mean, that was being managed by I believe by Pinnacle Public Finance, who was making those payments on MARTA's behalf. It was a little bit of a different or an odd situation, not the typical situation. So just wanted to clarify that this wasn't that you had $36 million of cash from your operating account that was an issue. This was a separate account. The other item up here is the one uncorrected misstatement for sales tax that was received late from the DOR. So that was simply just a timing issue. So this wasn't, what happened was the DOR did an audit of the sales tax receipts and revenue over the past several years, and found that they had underpaid MARTA, and I don't remember the exact amount offhand. I should have remembered that, but Cynthia might recall that. But in any case, that was received just right before we were finalizing all of this and putting the financials together, and so it wasn't material enough that it needed to be recorded. And because you didn't actually receive it until the fiscal year 21, the decision was made just to go ahead and record it into FY21 as revenue. So nothing really that was, there was no internal control deficiency or error or anything by MARTA. That was just a timing issue of they didn't receive the information until very late from DOR about that.
Brad, it was a little less than $9 million. I think it was $8.9 million.
So before we move on, any questions from anyone on any of these items? Okay, so here now we can move on to the next slide. And here we've just listed out a few of the emerging issues, the future GASB accounting standards that'll be implemented over the next couple of years. For this next fiscal year, the one that you're currently in, FY21, there are 3 GASB 84, which covers fiduciary activities. And I think we talked about this, honestly, we probably talked about it last year because initially it was going to be implemented this year and then it got delayed. So now that it's been delayed a year, it'll be implemented in FY21. What that will essentially do is it'll bring all of the pension and OPEB activities into the MARTA financial statements through fiduciary fund financial information. So it will not be in your statement of net position or your statement of revenues and expenses and changes in net position. It'll be immediately following that. in separate statements of the fiduciary financial information. So that'll be a change, and it'll be a couple of more pages included in your financial statements. That's different, but it won't impact what I would call the basic MARTA financial statements. GASB 90, at this time, I don't anticipate a significant impact from that on MARTA's financial statements. And then the implementation guide 2019-2 just ties into the GASB 84 above. For FY22, a couple of items here. Obviously, the biggest one that we've talked about in the past is GASB 87 over leases and how those will be recorded. I actually did a presentation to the accounting and various teams last year, going through kind of what that looks like, and I know they've got a good start on that, so we'll be continuing to work with them and talk with them about how to record those transactions and how to make sure that they have captured all of the lease transactions. And then there are obviously some more GASBs that are out there as well. These are just the ones for the next couple of years. There are ones that go out into FY23 or FY24, one of which that may have an impact on MARTA is GASB 96, which is subscription cloud services. But again, that's a few years away in time to really delve into that and make sure that it's implemented correctly. So with that, that covers everything we had for our presentation. Happy to try to answer any questions you may have. If not, thank you again for your time this morning, and really appreciate MARTA's effort throughout the process. Like I said, this was a different year for sure for everybody, and but I was pleased with how we were able to work through the audit process and still perform the audit on time.
Thanks, Brad. Thanks, Scott. Are there any other questions? I know the sales tax that the state came back and provided the additional funds, that was covered by Kevin in the board meeting yesterday.
Okay.
Are there any questions for Brad or Scott? Okay, we'll move on. Marie, I just saw where Chris Tomlinson joined the meeting, so you would want to add him to the attendees from the board. Okay, the next item on the agenda is the MARTA management audit. That's required by the state every 4 years. I see Representative Silcox has joined the meeting, and this report has gone to her as well as the governor and lieutenant governor. And I think she intends to have Jeff and his leadership meet with the MARTA committee before year end to go over this. So I'll just turn it over to Matt Berry, who's the director with KPMG and led this effort.
Thank you very much, Mr. Pond, members of the audit committee, Mr. Parker, and Representative Silcox. We're happy to present our report to you today. My name is Matt Berry. I am a director in KPMG's state and local government advisory practice. I'm joined on the call today by our engagement partner, Tony Hernandez, and our team member, Jignesh Patel of NITI Systems Consultants. So if you can go ahead and go to the next slide. So MARTA engaged KPMG this year to conduct the 2020 MARTA management audit to satisfy the requirement to conduct a management audit on a quadrennial basis and deliver that report to MARTA. I'm pleased to say that MARTA fully cooperated with the audit and was very good to work with throughout the entire process. So I want to thank everybody across the organization for being very open and supportive of the process. We've highlighted what our scope entailed in terms of this audit. At the high level, our scope really focused primarily on a couple of areas. One being the existence and effectiveness of policies and procedures across many areas of the organization, as well as performance and effectiveness reporting within the organization. And then there were additional specific items for select functions and departments that we are a little more tailored and specific. The table here shows the list of functional areas that we reviewed. So we, and the tasks associated with each one of those. So we looked at rail operations, bus operations, mobility operations, capital projects. Next slide. Information technology and information security, human resources, finance, procurement, and customer service. You can go ahead and go to the next slide. So we have, what we're going to present to you today is a summary of the what we call the high priority recommendations from our report. Our report contains, a variety of observations and recommendations throughout the entire, throughout the entire enterprise. We made a point to kind of prioritize these based on their potential impact to the enterprise and the opportunity posed by that, by the observation or recommendation. Our recommendation, our observations and recommendations shouldn't be seen as, if something is listed, it's that it's necessarily, something that the MARTA is the worst at, or that it's the highest risk observation that we had. We wanted to emphasize things that we felt would have a high opportunity for the organization, and B, that align to what we interpreted from the scope to be some of the key focuses. So again, as I mentioned earlier, policies and procedures and performance and effectiveness reporting were very critical throughout the scope, and we found that some of our high priority recommendations align to making sure that those policies and procedures are in place and effective, and that there are sound performance reporting techniques and capabilities throughout the organization. You can go ahead and go to the next slide. So we're going to, today, for the sake of time, we'll be going through these high priority recommendations. There are additional observations and recommendations contained in the full report, which has been turned over to MARTA and I believe to MARTOC. And also for each of these observations, MARTA's management response can be found in the full report. So observation 1A, insufficient enterprise-wide policy and procedure review and approval processes. What we observed, as we were looking through, as you saw on the earlier slide, we looked at pretty much most, if not all, of the functional areas involved in review of the existence and effectiveness of policies and procedures throughout the authority. And what we found was, in certain areas, and there were enough areas throughout the enterprise that we felt that it warranted kind of a broad recommendation, was what we saw was either dated or obsolete formal approved procedures, and the existence of draft unapproved procedures that may have been actually being used but hadn't necessarily gone through the full vetting, approval, and distribution process. Saw some processes and policies that had been the actual formal ones that were in place were dated, and like, for example, within human resources, we saw some that were from the early 2000s. So number one, it doesn't necessarily align to regulatory compliance, and B, the actual procedures that were listed there, predated MARTA's Oracle system and human capital management system. So there's some areas there where there's a risk that employees wouldn't necessarily have access to meaningful updated processes to allow them to be able to perform their functions properly. So our recommendation was to develop a structured process by which policies and procedures are reviewed and updated on a regular basis, and develop a defined approval matrix and a timely cadence for reviewing and approving those procedures, and then holding people accountable throughout the organization to make sure that procedures are being reviewed and updated accordingly. For item 1B and 1C, I want to hand it over to our team member Jignesh Patel from Nidhi Systems Consultants. Jignesh, go ahead. Jignesh, I think you're on mute. No, I'm still not able to hear. Well, I'll go ahead and cover briefly items 1B and 1C. So 1B is related to performance management. Essentially, what we found is, throughout the authority, I think there's been a lot of investment made and some good practices around data management throughout the authority to be able to really conduct regular, ongoing performance and effectiveness reporting. Our recommendation was, or observation was, that there's somewhat siloed data management platform, so multiple systems that have been deployed. And while MARTA has a very data-rich environment, there's somewhat of a lack of that next level of mature data capabilities to really be able to, for lack of a better term, slice and dice or conduct next level analysis. Excuse me. To really be able to take full advantage of that data-rich environment, and that was really the crux of our recommendations for both 1B. And then if you go to the next slide.
Hey, Matt, can you hear me?
Yes, there we go, Jignesh.
Sorry for that.
Yeah, so if you can feel free to cover 1B and 1C now.
Okay, if you can go back to the last slide quickly, please. So performance data management strategy, basically 1B and 1C are both about the data. MARTA is one of the agency that, fortunate to have a lot of data, a lot of systems collect a great amount of data. There's a lot of power into that. And investment wise also, MARTA has two very mature and very powerful data management systems at their disposal. When MARTA purchased Oracle ERP system that came bundled with Oracle Business Intelligence Enterprise Edition, or OBIEE, and that's pretty mature and so powerful system. But the pricing model, from what we collected from through the interviews, are not the most favorable for MARTA. So MARTA has also invested into Microsoft's Power BI solution. And seems to, basically based on the interviews and the findings, that seems like MARTA is invested into Power BI. So our recommendations are having a formal data management strategy, explore full potentials of Microsoft Power BI, and then have a more integrated effort for data management strategy. Next slide, please. This one is about, again, as I mentioned, 1B and 1C are both about data. MARTA has quite a few enterprise systems, from ERP to fare collection to a lot of intelligent transportation system, vehicle systems, communication systems. They all collect a vast amount of data, and there is a lot of power into that. And for most part, each system has pretty sophisticated KPI reporting, data management, dashboard tools. And the IT team has done pretty well supporting each department with the data needs. And to that effect, a research and analysis team was formed, and that is also supporting different departments for KPI reporting, as well as data reporting tools. What we have found is there are still some silos, there are still some gaps with integration. And if MARTA were to look at the integrated data management strategy, that would benefit. Some of the agencies across the country have started doing that, and they've benefited. Further to that, when we spoke with the leadership team at MARTA and the IT and R&A team, seems like there is a good amount of progress that is being made. And they are able to meet, and this is the, I'm looking at the MARTA response, they are able to meet the current data needs with the tools they have at the disposal. What our recommendation goes little further is basically there are additional use cases that can be explored. And we have provided some samples of easy use cases that can be tackled with this integrated data management needs and support MARTA's data needs. Back to you, Matt.
Thanks, Jignesh. Moving on to 5A and 5B, these both are related to the capital program. So with 5A, there was an internal audit report from 2017 identifying gaps in both the capital management program structures as well as processes. And one of those observations was a lack of documented SOPs to really support effective project and program management across the authority, which has largely been a decentralized function within the authority. What we were able to identify was that while there's in the process of the broader CPMO development or CPMO centralization strategy that MARTA is undergoing, some progress has been made there in terms of cataloging those procedures for development to try to drive consistency and governance across project and program management processes across the authority, but they haven't fully been developed yet. And based on our observations, we anticipate, or MARTA anticipates, and they have a plan to achieve that by either the end of calendar year 2020 or beginning of 2021. But it's our recommendation is to continue to prioritize that development, execute the existing plan, and make sure that there's an effective rollout of those development and rollout of those procedures. For observation 5B, in terms of data management and tracking and monitoring of capital projects across the authority, again, a decentralized approach that MARTA has taken in the past. What we identified was that there was primarily manually tracked data, so around cost data, schedule data, milestone data for capital projects, depending on where in the authority it resided. And so you didn't have a single source a single data source that was real time and current and didn't require manual data manipulation or data consolidation by a centralized person. So you don't really have, there's kind of a lack of again, that real time visibility into the status and health of the full capital program without a significant amount of manual effort to kind of consolidate and smooth that data. So MARTA is in progress on implementing Oracle Unifier functionality, which will integrate a lot of that data. And so our recommendation there was to continue that implementation and develop very robust processes as part of, again, the recommendation we have in 5A to make sure that there is effective monitoring and reporting of this capital project data. Next slide, please. So for 6A and 6B, I want to hand it back over to Jignesh to discuss some of the observations we have around MARTA's Oracle environment.
Yeah, wonderful. Thank you. So 6A, Oracle Business Process Improvement Opportunities. MARTA is currently on version 12 of Oracle, which was last upgraded a few years back, I think 2012 or 13. And now MARTA is in process of upgrading to version 19G, which is a pretty significant upgrade. It's almost 7 versions. So this would be a good opportunity for MARTA to look at, take a holistic look at all the business processes associated with Oracle and kind of look at ways to optimize them and create automations around that. One of the most a common theme was, some of the business processes can be done a little better. I'm also happy to report that compared to the last audit that we had, and we read the 2012-13 audit, MARTA has made a significant progress with the business processes. A lot has been done, but it can be taken a little further. So our recommendation is that while this new upgrade is taking place, I think it's happening sometimes around January or February. This is a great opportunity for MARTA to look at all the business processes, look at the ways to make them better, look at the ways to optimize them, look at the ways to automate some of the manual functions.
Yeah, and if I can interject here, I think I want to emphasize, as someone who was part of those 2011, 2012, 2013 management audits for MARTA, I can definitely indicate that there has definitely been progress around a lot of these processes. I think as Jignesh said, there's definitely, where we're looking at right now is some lack of integration, some opportunities for process improvement, and really finding opportunities to, now that you're, again, moving forward with the upgrade, to find a way to build a strong foundation for a transit agency in the 2020s. That's really just trying to build that strong foundation moving forward. So that's really where the heart of this recommendation is.
Thanks, Matt. And to that effect, I'm actually looking at some of the notes from MARTA response. And as of October 2020, which is just last month, MARTA has appointed 2 business process managers, first role of its kind, to take this further.
Yeah.
6B.
Alice Floyd. Can I ask a question real quick?
Please do.
Do these recommendations, do you do any kind of cost associated with implementing them, or costs associated to MARTA if we don't implement them?
So that, sorry, I'll jump in here. So that we typically don't, where we would typically do that is if there's, what we would call typically like a roadmap or an implementation plan. We would go through and I think if you can even go back to our 2012 report, which was a separate document, we developed an implementation roadmap that showed here's the anticipated complexity and the estimated resources that would be needed to implement these. I think we could, with a little bit of time, we could probably do a quick analysis of that, but we would definitely, it would be part of a broader kind of, here's the specific steps and resources needed to implement.
Okay, thank you very much.
Sure.
And that would,
Mr. Chairman, if I may, I have a question. It's Roberta. Mr. Pond? Did I lose you?
No, you didn't. Go ahead.
Oh, okay, thank you. Good morning. Thank you all for the presentation. I wanted to go back to, I think it's 1C, yeah, recommendations up in 1C. And you talk about the enterprise data warehousing solution. Is that a piece of software in itself, or would that be a networking project? How would we achieve something like that?
So as far as the solution is concerned, MARTA already has a pretty solid tool, as I said, Oracle Business Intelligence Enterprise Edition, as well as Microsoft Power BI. You cannot go wrong with any of them. Seems like MARTA has made a decision to continue investing into Power BI because of favorable cost and other terms. So that would be your solution. What comes next is basically a data management strategy, looking at all the enterprise systems, as I said, from fare collection to ERP to ITS and project management, all kinds of systems, what kind of data it's collecting, and then what are the opportunities for integration. And to that effect, different use cases can be developed. Let's say if you integrate from different system, what happens? And that would be the next step.
So we essentially have the tools required. It's just a matter of using them differently.
Differently, the tools are already there. Basically, now coming up with the holistic approach for enterprise-wide strategy. What's happening currently is each system is able to feed the data into that, and we are able to create KPI reports and dashboards for each of the systems separately. Now we'll have to talk about integration of them, and basically you get end-to-end visibility.
Mm-hmm. All right, thank you.
I have a question also, Mr. Chair.
Yes.
Yes, just following up on Roberta's comments, I was just curious because you keep referring to this previous audit. Was there significant remediation from the previous audit? I mean, I know you're saying MARTA's trying on these different things, but, I hate to keep remaking the wheel, right?
Sure. Yeah. And let me, for a little bit of context, KPMG performed the 2011 through 2013 management audits. And then I think we made reference to, particularly around the capital projects, there was a 2017 internal MARTA internal audit report. So just want to make sure we distinguish between those two things. I can speak to the differences between where MARTA is now and where they were 2012 timeframe, particularly on the administrative side of things. I think, as we mentioned with the Oracle environment, there's been a lot of progress made. There's much more. There's been a lot more modules that have been adopted and functionality that has been deployed across the authority around Oracle than were at that point. Back in 2011, 2012, MARTA's critical issue around Oracle was they had kind of partial, and to the best of my recollection, MARTA had essentially partially adopted Oracle and implemented Oracle, and they had modules that had not been fully implemented or fully adopted in terms of performing processes. That has been significantly improved over that time period. Where we're talking about now is, okay, now that you're going through to a significant version upgrade here in the next few months, where you're going to have better capabilities, it presents an opportunity to take those process improvements to that next level and be able to really take advantage of the opportunities. But I would, again, having that hands-on experience from 8-9 years ago, I'd say MARTA's absolutely in better condition than they were in their administrative environment than they were in 2011, 2012.
Thank you.
Okay. Jignesh, do you want to cover 6B?
Yes, please. Thank you. So yeah, 6B is about Oracle integration with other enterprise systems. Again, Oracle is a pretty powerful ERP system. It provides a very rich set of application programming interfaces or APIs. APIs are the means for different applications to integrate with each other. MARTA basically, based on what we have collected, and as just to echo Matt's point, right? The MARTA's Oracle implementation has got lot better. A lot of different modules have been implemented, and integration has gotten a lot better as well. But also, when we spoke with different department, HR and procurement and different sections, seems like there are still some integration opportunities for various other enterprise and in-house systems with Oracle ERP. And that would basically eliminate a lot of manual and error-prone processes that MARTA has. And by integrating them and by synchronizing the data, you'll get a lot more benefits. To that effect, MARTA has basically responded that there was an HR assessment from North Island that was finished just last year, and they have recommended quite a few different integration points, and MARTA is in process of reviewing and prioritizing them. So basically, our recommendation is to continue that and expand it not only to HR but other enterprise systems as well. Thank you. Back to you, Matt.
Yep. If you can go to the next slide, please. So these observations, and these are our final observations that we deemed as high priority, are both related to procurement. And both relate to manual processes. So 9A indicate, when it comes to procurement, there's a combination of some automated but largely manual processes to execute a lot of the procurement and contract management processes and life cycle. And this, among other factors, these manual processes contribute to extended procurement life cycle times. And there may be an opportunity to better deploy procurement resources. So our recommendation was to conduct an in-depth analysis into those processes, identify specific opportunities to streamline and automate processes, in particular where better leveraging of Oracle solutions can be realized. And then that ties directly to 9B, which is, I think 9B and 9A are very much hand in hand. The lack of contract management functionality in an automated nature, I think, directly relates to 9A. So MARTA doesn't currently leverage Oracle functionality to effectively manage contracts. I think what you see is a lot of what we would call "quote unquote" shadow Excel sheets. So people within contracts procurement that are maintaining a Excel sheet saying what for each contract, what's the current balance, what's the contract execution date, all these kind of things. And what that leads to is both the risk of, as Jignesh was just referring to, the risk of data errors, but also just a lack of visibility and the reliance on manual processes to keep those things updated, as opposed to being able to more effectively integrate that with your financial system so that you can keep these things tracked and not have to rely on manual entry. So our recommendation there was to evaluate deploying contract functionality and developing processes that take advantage of that functionality. I can report that MARTA indicates that they're in discussions with their IT department on what that contract management functionality might be and what solutions might be available. So, Mr. Pond, this concludes our presentation. So happy to hand it back over to you.
Sure, thanks, Matt. I've got one question before I open it up. Maybe it's not a question, but it's an observation. But when I look at the truly the areas of high risk, such as rail operations, and I've read other parts of the report in more detail than the snapshot. But when I look at rail operations, bus mobility operations, IT security, cybersecurity procedures, payroll procedures, which are very high risk areas, you had no observation, and there appeared to be no significant issues there, findings. But you, in summary, so the high risk issues seem to be fairly well managed and taken care of. There were a number of recommendations, but they really focused around policies and procedures, data management, some of the things in our capital programs that we're in the process of improving. So from a big picture standpoint, are there really any high risk issues that we need to focus on?
No, I would say in terms of high risk, I would say, I would say MARTA is doing a fairly good job. As you indicated, when we looked at the policies and procedures, particularly as you said, for the transportation modes, we didn't have any significant, we didn't notice any significant deficiencies. I think where we did find things, it really tied to that observation 1A, which is there needs to be a better process and procedure in place enterprise-wide to regularly review and update those, particularly as either regulations change or compliance requirements change. And just to make sure that people across, employees across the authority have access to the most up-to-date policies and procedures. But what we saw was very robust, and it's not surprising in a very heavily regulated environment that MARTA would have fairly robust policies and procedures in those areas. But more broadly, absolutely, we didn't see anything that we would, consider a showstopper, for lack of a better term, particularly around policies and procedures or some of the areas that were included in our scope.
Right. And the other piece of that, of course, is to embrace technology to do a better job across the board with operations. Yeah.
And I think that's at the end of the day, that's the difference between, a typical audit and a management audit. Our goal here is to provide, not just, identify risks and things like that, but also to identify opportunities and say, here's ways that, as MARTA wants to position itself moving forward as a best in breed transit agency, here are some things that we would recommend to help, enable that.
Okay. Are there any questions for Matt and KPMG?
I had a couple of questions.
Okay, go ahead, please.
Thank you. Matt, thank you so much for this presentation. I was curious how you ranked all the recommendations, because there were 4 categories of different recommendations, and these obviously you're just highlighting the top ones.
Sure.
I was curious how you ranked the others.
Sure. So, it's definitely more of an art than a science. I'll put it that way. But I would say that, we wanted to make the priorities, what's the most impactful in our opinion to the enterprise. So what that means is, whether, and I think we say this on slide 5. So it's assessing the degree of impact to the agency, potential return on investment, estimated return on investment, and the risk and or opportunity presented by the observation. So as we said earlier, we didn't see, as I said, kind of showstopper risks that really pose, imminent, danger to the authority from either a safety or financial perspective. This is really more around, where there are opportunities either to improve controls and compliance or to improve performance across the authority. So we really kind of reviewed it and said, okay, we didn't want to say everything was high priority. So you kind of have to kind of tier things and say, okay, if we were going to have them address some of the critical things in the report, what would be the most critical? And these, maybe 8 or 10 that were in the high priority are the ones that we would, of what we identified within our scope, would be the items that we'd said, this is what we would take a look at first, and then tiered below from there.
Do you think it would be worth taking the time to maybe make a strategic plan and get, as Mr. Floyd asked, a dollar amount on these and kind of get a group within the board or within the organization to, like I said, kind of plot out a strategic plan and financially plan? I think, especially given the current environment with federal dollars going down, that, all these gaps, of course, cost money. And if we can save dollars, taxpayer dollars, and all of this, it's going to be better for MARTA and better for the transit, right? I'd rather the money going into helping more people than into all these processes, for example. So would it be worthwhile, do you think, to do a strategic plan with a group and kind of put the priorities on the dollars in terms of dollars spent to make all of these upgrades?
Sure. I mean, that's something that we are happy to discuss with the authority and with the board as needed. As I said, it's something that we did for in the wake of our 2012 report, the what we call the strategic transformation plan report. And so it's something that we have done in the past, and we're more than happy to revisit if requested.
Thank you.
Thank you. Any other questions?
No, Mr. Chairman, I'd recommend that we consider that just exactly as the chairman has recommended there as discussed. I would recommend that be one of the items of discussion for this group.
Good thought. One other issue, and I've mentioned this to both Emil, who's heads up internal audits, as well as Jeff, but I think the plan is to take these list of items and in the internal audit, Emil and his people will basically put together a tracking list with some deadlines associated. Is that right, Emil?
Yeah, this is Jeff. That is our plan, and more than happy to have a conversation around a strategic approach to these recommendations, and as the chairwoman had indicated, allowing the roadmap to really focus on where we can get the best efficiencies that ultimately drive cost savings, because that's really what's really important for us to focus on. So we can work on that both internally and have some conversations with KPMG about an approach like that. And I would just add that some of these efforts are things that are already in our strategic vision. I would point to the recommendations around our capital program. That's been something that we've been emphasizing for some time, and are well on the way to implement those items. It's just this is a snapshot of where we are, and we're continuing to develop and improve our program delivery methodology and approach. And then other items largely around the Oracle system, recognizing that the first step is getting a fairly outdated Oracle version into a newer version, and then obviously the goal has always been to capitalize on those. I think one of the biggest areas are these last two, the ones that are staring us in the face. We do recognize, and we've got some efforts around making some improvements to our contract management system and eliminate those, as Matt had indicated, those shadow, I think he used the term shadow Excel spreadsheets that are being used within the procurement group. Liz is working on focusing on that, and our relatively new director of procurement is helping support those efforts. So we can come back to this committee with those efforts. So, and I'm sure we'll talk about that at the chairwoman's MARTA committee meeting. So,
thank you. Are there any other questions? Okay, again, thanks, Matt and your team for pulling this together, and appreciate your group being here. So the next item on the agenda, in both the Crow and KPG and the county Matt Barrett's crowd can drop off if they like or stay on. It's totally up to you. So again, thanks, guys. Emil, would you go ahead and go through your part of the program?
Absolutely. Mr. Pont, Mrs. Hardage, Chairwoman Silcox, members of the MARTA board, Mr. Parker, and the internal audit activities for the MARTA fiscal first quarter, beginning July 1st, ending September 30th. Next slide, please. During Q1, the operational audit group kicked off two very large audits. The first one is an audit of the Cubic automated fare collection system. This audit is done in conjunction with our IT audit branch. Cubic is one of MARTA's crown jewels. It's a system that's critically important to the authority. It has significant operational as well as IT elements to it. So we're spending the appropriate amount of energy and effort to audit that system this year. It should be audited on a regular basis. This is, the lifeblood of the authority, if you will, from an operational point of view. So we kicked off the audit. We're currently in field work. The next audit that we kicked off in Q1 is a follow-up 2017 CIP audit. We wanted to see how far the recommendations have gone, established a very up-to-date baseline so that we can continue to track the progress of all the various recommendations from that audit. Next slide, please. We continue to track 19 significant findings from prior audits, which have been discussed previously. Unfortunately, the onset of COVID created some issues across the authority in terms of the timely execution of some of these recommendations. So I'll be reaching out to various different executives to sit down with them and develop a revised timelines that will work in the current environment and will provide realistic timelines for the remediation of some of these prior recommendations. Next slide, please. As I said, we're tracking 19 significant and 10 moderate findings. As those recommendations get implemented, we drop them off from the reporting and we only maintain the ones that were live. And as I mentioned, those recommendations that we see on this slide and the previous slide were discussed in previous audit committee meetings in great detail. If you can go back to the next slide. Information technology. They're also participating in the Cubic automated fare collection system audit. There's a significant IT and information security component into the automated fare collection system. We should be able to be done with this audit by the next audit committee meeting, and we will discuss the findings during that time. The other new audit in the information technology audit group is the software patch management audit. I'll take just a few minutes to clarify what this cryptic title means. Patch management is a very important element of every organization's cyber defenses. It refers to the installation of software security updates on various computers, servers, and other devices, such as routers, for example. Those security updates are designed to mitigate or remediate known security vulnerabilities. This is a basic and very important process in every organization, and I would add that it's very important for all of us as individuals to patch all of our individual computer systems at home. Just to give an illustration, probably the most notorious example of when software patching failed in another organization is the Equifax cyber breach in 2017. We have all heard and read about it, but it was really caused by unpatched web server. The patch had been available for a number of months, and the bad guys used that vulnerability that remained exposed to get into the Equifax environment and basically download all of our credit histories and other personal information. So, software patch management should be audited on a regular basis, and this is why we're auditing it in this quarter. So next slide, please. We're following up on a number of previous audits that have been discussed in prior audit committee meetings. Some of these things, suffered an impact from COVID-19 in terms of the timely remediation. I'll be sitting down with rail operations, with Kirk Talbot, with Dean Mallis to develop a revised set of timelines that are realistic so that we can track realistic timelines as it relates to the remediation of some of the prior significant findings. Bibi, next slide, please. Switching over to the contract audit group. The contract audit group, which as a reminder handles audit requests as a pipeline, issued 16 audit reports during the first quarter. We identified 148,000 in unallowable expenses in various different overhead rate reviews. Those are unallowable under FAR. In addition, we identified 47,000 in unsupported expenses in cost price reviews. In progress, as of September 30th, we had 13 contract audit reports that we will be reporting at the next audit committee meeting. So overall, good performance. Next slide. Our fraud, waste, and abuse activity has seen or the calls we receive on our hotline has seen a reduced volume as we went into the COVID remote working environment. During the quarter, we received only 3 calls. 2 of the calls really related to one particular complaint. That complaint was referred to executive management in rail operations for further review and analysis because it had to do with an employee who was allegedly not reporting all of his hours on his timesheet. Since this was not really related to direct financial fraud, it was referred to operational management for review and improvement. Next slide, please. We finished one investigation during the quarter that was open previously, and it was closed, and the internal audit review found that the allegation was not merited and was not substantiated. Next slide. Mr. Pond, this concludes my briefing for the audit, internal audit activities for Q1 of FY21.
Okay. Are there any questions for Emil? All right. Thank you, Emil. Dean Malice?
Yes, good morning, Mr. Pond.
Cybersecurity.
Cybersecurity. Do you have those slides up there, Emil? They'd be at the end. There we go. Good morning, Mr. Pond, Ms. Hardage, Representative Silcox, Mr. Parker, and the members of the Audit Committee. This is my information security update for November 2020. Next slide, please. So for this update, I wanted to go over kind of things that we have done, doing, and will be doing over the next year. So one of the first things that we did in a couple of months ago is we did a train control penetration test that was completed in June. There are some remediation items that came out of that test. All in all, it was pretty good, but there's some things that we can do for monitoring and securing that side of the house. One of the things that I did a couple of months ago, there's a free service, and I'm a big proponent of using when I can do things for free, is what they call malicious domain blocking and reporting. It's a service that's offered by MSISAC, and what it does, and we're not getting too technical, is it takes all of our outbound traffic and basically runs it through a large database to make sure that we're not hitting malicious sites. And if it is, it blocks those sites, and then we get a report on that. But it's something that is free to the authority and really improves our security posture. Most of the ransomwares out there have to call home first before they can encrypt, and this does a great job of blocking most of those ransomware attacks. We had Cybersecurity Awareness Month in October. We put together 5 lunch and learns. We ended that with a lunch and learn with a former cyber criminal. He was dubbed the godfather of the internet and built the framework around how cybercrime is done today. He went straight about 10 years ago and consults with the FBI and Secret Service, and it was a really very educational lunch and learn on how cyber criminals think, and really getting it from the perspective of somebody that used to commit crimes. Excuse me. We did a phishing campaign as part of testing in October, and completed that in October, and got a baseline of where the authority is from people clicking on links and entering data in links. We had about a 10.2% click rate, which is pretty good. Industry standard is around 25, but we still have some work to be done. Part of the phishing campaign setup as we mature the program is if somebody clicks on one of those links, they'll be prompted for a video that kind of explains why they were, what they should have looked for in those emails that would have cued them that it was a phishing campaign. We kicked off November 1st cybersecurity awareness training for the authority. That's running through the end of December, where the people need to complete that. It's about a 40-minute video on cybersecurity and things to look for, and the end of that video is kind of a presentation done by Kevin Mitnick, who was another former cyber criminal who runs an organization that produces cybersecurity videos and training. For FY20, we're PCI compliant, so every year the authority has to go through an assessment because we take credit cards, and there's a framework called the PCI DSS that we need to meet those criteria to be compliant, and we are compliant for FY20, which is good. What could happen if you're not is you could Visa and or MasterCard, or the banks can fine you, or they could stop you from processing credit cards. Excuse me. We have started what they call multi-factor authentication. This goes into the procurement that I came before the board, I think it was February, that enhanced our Microsoft products. And this multi-factor authentication, and we've started the rollout very slowly, but it requires when users are not within the MARTA network and are sitting at home and not on VPN and want to access any of the cloud type of applications, they'll be prompted for a code. Most people are used to that from your banks now. I think even Gmail does that as well, where you get the code to your phone. It's a second factor of authentication to get you in to your account. The other thing that will be rolling out after we do the initial multi-factor is requiring multi-factor for any of the what they call the privileged accounts. So this would really affect Kirk's team because they've got two accounts. One account allows them to do those high-level functions that they need to, administrative functions on systems. So we'll be requiring that multi-factor on that across the authority. Excuse me. Next slide, please. So for Q3, we're looking at getting the monitoring of the train control side, so we can get alerts and set up what they call a SIM, a log aggregator, really, so that we can see if there's any malicious activity happening on that side. I'm looking for Q3 to replace our current antivirus. It's outdated. It uses what they call signature-based protection, so the virus has to be known. The vendor has to write the code for it to pick up. I'm looking at replacing it with what they call really advanced endpoint that looks for anomalous behavior, but that's something toward the Q3 side. Looking for replacing our vulnerability scanner as well. That's the, Emil touched on that, where he talks about patch management. The vulnerability scanner scans the environment and produces reports on where we're deficient in our patching or security updates. The current appliances that we use are not really able to produce the reporting that I'm looking for that would provide meaningful reports over to Kirk's team to help them remediate some of these. It would be really a cost neutral because they all cost about the same, but I'm looking to upgrade that. Part of the Microsoft E5 upgrade that we procured is the cloud app security, which provides analysis across all of our cloud implementations. That would be the OneDrives, the SharePoints, and your email. It looks for data protection and threat protection. One of the other things that we're going to look to implement as part of the E5, because a lot of this was bundled in, is our data loss protection, so we can stop sensitive information from being emailed out and sent out of the authority. advanced threat analytics, a real-time analysis of attacks, looking kind of baselines what's normal behavior and alerts on when there is not normal behavior. And then the Azure is our cloud where everything is hosted. Again, threat protection, it's part of the bundle, and these are things that we're going to be looking to implement the later part of the year. Next slide, please. I put this slide in. The program that I'm building is based around the risk management framework and the cybersecurity framework, but embedded in there is what they call the CIS top 20 security controls. It doesn't map all of the security controls, and those are items that you would implement to improve your security. It doesn't map all of them to the RMF, but it's a great place to start. And this is where we are in the program in terms of getting that first phase. And I put it in there for reference for the committee so they can see the progress that the program is making in attempting to secure MARTA to the best of our ability within the cost constraints that we have as well. And that concludes my presentation to the committee.
Okay. Thank you, Dean. Are there any other matters or points or questions anybody would want to bring up? Okay, I'd particularly like to thank Representative Silcox for spending time with the committee. I know that she was very hands-on with helping develop the scope for KPMG, and I also think we appreciate her thoughts on the strategic plan and path forward. So would you like to add anything, Deborah, before we end the meeting?
Al, you're very kind. I think I'll hold my remarks for, I believe it's going to be December 8th for the MARTOC meeting.
Okay. All right, looking forward to it.
Okay. And just one last thing, I would like to comment on Representative Silcox. I had the opportunity to observe the previous MARTOC chairs, and I can tell you that she's very hands-on and very involved with these details of MARTA more so than I've seen in the past. So again, we appreciate your service to our system and a service to the state of Georgia.
Thank you so much. I really appreciate it. Thank you.
Okay, anything else? Well, I will adjourn the meeting then. Thank you, everyone.
Everybody have a good afternoon.
Thank you.
Have a good weekend.
Thank you.
Thank you.
Thank you.